So we're very much honoured to welcome Mr. Lawrence Wong, Deputy Prime Minister, Minister for Finance and Chairman of the Monetary Authority of Singapore. Singapore's financial services sector holds a prominent position in Asia, renowned as a leading financial hub in the region. Its strategic location, robust regulatory framework and exceptional infrastructure have made it a preferred choice for global financial institutions, investors and insurers. Mr. Wong's extensive background in the public service, including his tenure as a civil servant and his various ministerial roles since 2011, showcases his remarkable commitment to serving the nation. In recognition of his outstanding contributions, Minister Wong was promoted to the position of Deputy Prime Minister, and as we all know, only this weekend, the current Prime Minister indicated his intent to hand over to Mr. Wong before November 2024, prior to the next election. With his expertise and leadership in the financial sector, Mr. Wong is playing a pivotal role in shaping Singapore's financial landscape. Let's extend a warm and enthusiastic welcome to Minister Lawrence Wong.
Mr. Josh Landau, President of the International Insurance Society, Mr. John Spence, Conference Chair of the Global Insurance Forum, ladies and gentlemen, very good morning, and I'm very happy to join you for this year's Global Insurance Forum. Finally, back in Singapore, in person, after 3 years of a virtual format. It's good that we have the chance to meet face to face, and let me also extend a very warm welcome to all our overseas guests. Since we last gathered in Singapore, the global economy and risk landscape has seen some profound shifts. We are moving from a period of benign globalization to a new era of great power competition. And we can see this around us in Europe, an ongoing war in the Ukraine, in the Middle East, conflict between Israel and Hamas, which threatens to widen into a regional conflict which will have risk to food and oil supplies. In Asia, fortunately, we still have peace and stability, but as we all know, there are flashpoints in Taiwan and the South China Sea where accidents and miscalculations can easily happen. And in this new era, the global consensus around free trade, unfortunately, has been fraying. Countries are prioritizing geopolitical risk and national security above free trade. And that's why global supply chains are being reconfigured along geopolitical lines rather than economic logic. And on the macroeconomic front, governments and companies are also adapting to higher interest rates, which we expect to be higher for longer. Higher interest rates will, in some ways, reduce market distortions after going through 10 years of easy money, and it will reduce the misallocation of capital that we have seen over that past decade. But certainly there will be painful adjustments in this path towards the new normal. Governments that have been used to deficit financing with large deficits and new levels of debt must find it very hard to sustain that with interest rates at new highs. So amidst this more challenging backdrop, we also have to consider other major trends, and there are two which I will highlight. One, climate change and the transition to net zero, and second, the adoption and evolution of game-changing technologies like artificial intelligence. And as we grapple with all of these changes around us, the insurance industry will play a key role because you are experts in understanding, mitigating, and financing risk. And so all of you in the industry are important partners for businesses and policy makers. Together, we will have to navigate the risk in this new world, tackle the challenges ahead, and also seize new opportunities that will arise from these developments. And so today I will touch on 3 themes to unlock and accelerate the value of insurance. And these are the 3 T's which I will touch on: transition, technology, and talent. And let me take them in turn. First, on transition to net zero. We all know the climate crisis is worsening and requires collective and urgent action. Global temperatures are rising, and we have already seen how this impacts food and water security in many parts of the world. We are experiencing more frequent weather changes and more fatal extreme heat events. Essentially, we are in a race to reach net zero by 2050. And year by year, when you look at events around us, we worry that we are lagging behind in achieving this target. Asia will be the key battleground in this race to net zero. Asia accounts for about half of global greenhouse gas emissions, as most of its energy needs today are being met through fossil fuels, including through coal. Moreover, much of Asia is developing and its energy needs are rising. Not to mention that there are still millions of people in Asia without access to electricity and water. But it is going to be very expensive for Asia to decarbonize. Carbon-intensive infrastructure needs to be upgraded or replaced, and new low-carbon energy infrastructure needs to be put in place. The insurance industry can be a powerful enabler for such transition finance. As underwriters, the industry can develop insurance solutions for renewable energy infrastructure and emerging technologies with promising decarbonization potential. These solutions can help mitigate and crowd in much needed private capital. For example, renewable energy infrastructure like solar and wind plants can have variable returns due to weather-dependent energy output. To mitigate the variability of returns, some renewable plants can benefit from parametric insurance covers, which pay out when energy output falls below pre-agreed thresholds. Future fuels like green hydrogen hold huge promise for decarbonization. Innovative risk management and insurance solutions can help to mitigate the risk involved in the storage and transportation of hydrogen, enabling larger scale production on a commercial scale and attracting private capital into this new area of energy infrastructure. As investors, insurers can allocate more capital to address the infrastructure needs of emerging Asia, particularly green infrastructure. The scale and investment characteristics of infrastructure line up well for insurers' investment needs. Insurers hold significant investment capacity relative to the infrastructure investment needs. According to the World Bank, a 5% allocation of insurers' gross written premiums into infrastructure investments could close half of the world's annual infrastructure investment gap. So the solutions lie with all of you. Infrastructure assets have long duration and can potentially match well with the long-term liabilities of life insurers. Infrastructure finance is typically structured to keep pace with inflation, which can provide risk diversification and serve as an alternative asset for insurers' investment portfolios. To support insurers' investments into infrastructure assets, MAS has been closely monitoring international standards in the insurance sector and studying available data relating to infrastructure assets. We will soon issue a public consultation document on the proposed capital treatment for insurers' investments in infrastructure assets. Given the natural fit between insurers' investment needs and sustainable infrastructure assets, the question is, why don't we see a larger allocation by insurers? And the simple answer is the bankability of projects. Only around 10% of projects in Asia's emerging economies are bankable. This clearly constrains the available pipeline of investable opportunities for insurers. And in this regard, blended finance can be one solution to bring marginally bankable infrastructure projects within the investment risk appetite of insurers, as well as other private investors. Through blended finance, we use a limited pool of concessionary capital, either from public or philanthropic sources, to crowd in and catalyze multiples of private capital. And that's why Singapore has been actively supporting and promoting this space of blended finance. We have platforms that aim to scale infrastructure investments and blended finance. One example is Bayfront Infrastructure Management, which acquires infrastructure debt from banks and repackages them as infrastructure asset-backed securities, providing institutional investors, including insurers, access to a diversified portfolio of infrastructure exposures. We are now also working closely with key partners to develop a blended finance platform that will invest in green and transition energy infrastructure in the region. The platform will allow commercial participation alongside concessional and catalytic capital to channel financing to projects that would otherwise be only marginally bankable. And here the insurance industry would be able to invest in the commercial tranches and also provide risk mitigation solutions to bring more energy infrastructure projects to market. So this is still work in progress. We have been discussing very deliberately with many partners, and we hope to be able to share more when we are ready. But this morning, I'm pleased to share that MAS is working on a pilot with the industry to support the flow of life insurer investments into sustainability-related infrastructure projects in Asia. This pilot will test bed a tailored, customized package of risk guardrails, risk-appropriate regulatory treatment, and capability-building facilities to enhance insurers' familiarity and comfort with infrastructure investments while putting in place suitable investment caps. We hope this initiative can provide an impetus for insurers to allocate some of their investment portfolio to infrastructure projects with promising decarbonization potential and therefore play a role in the region's net zero transition. Besides your role as underwriters and as investors, insurers, all of you, also have close relationships with your underwriting clients and investee companies. And by integrating physical and transition risk as part of the underwriting process and sharing insights on material risk of areas of risk exposure and resulting economic impact, insurers can nudge their clients to transition to a lower carbon footprint. And so to facilitate this process, MAS recently proposed guidelines on transition planning for banks, insurers, and asset managers in Singapore. Part of the insurer's transition plan will involve stewarding their clients and investee companies to transition in an orderly manner through engagement and facilitating transition activities, rather than indiscriminately cutting ties with clients or investee companies deemed to be of higher climate risk. A structured process, active engagement, and a risk-proportionate approach, taking into account sectoral as well as firm-specific factors, will be important aspects of transition planning. And to do this well, insurers and brokers need to develop the right capabilities and solutions. So on this note, I welcome the launch of the WTW Asia Pacific Climate Risk Center in Singapore. The center will develop risk advisory, analytics, and risk financing solutions to support transition efforts of firms in hard-to-abate industrial sectors, which are key for Asia's growth. The center adds to the growing community of Asia-focused climate financing capabilities across the financial sector, academia, and professional services based in Singapore. So I encourage strong collaboration between these teams so that we can all accelerate the green transition in Asia. So that's the first T around transition. Second T is on technology. And there are many areas of technology, but I will focus on artificial intelligence and not just plain vanilla machine learning, but as everyone is excited about, generative AI or Gen AI. Several insurance players have already started experimenting with how Gen AI can transform their business functions. For now, there are limited use cases of strong impact. But as with all technology waves, we tend to overestimate the potential in the short term and underestimate the potential in the longer term. There's usually a lot of hype going into a new technology, a lot of disappointment after the hype, but later on, as more adoption, as the technology matures and there's greater adoption, we see more promising use cases. So in time to come, I have no doubt that the models will get better and will be applied across a wider range of applications and functions and will bring about a transformation in finance and insurance. At the same time, we will have to grapple with deep ethical issues and consider how AI systems can be better imbued with human context and human values. MAS is supporting the use of Gen AI in the industry in two ways. First, in facilitating the development of a governance framework for responsible AI to harness its benefits while mitigating the downside risk. A Gen AI model failure, while it may be rare, can result in widespread damage if the model is fully trusted in the wrong scenario. You may say the chance of a model failure is only 1%, but that 1% failure can have widespread implications if it is applied wrongly. So guardrails are necessary so that financial institutions can adopt Gen AI in a responsible manner that keeps consumers, businesses, and the broader economy safe. MAS has also launched Project MindForge to promote the responsible use of Gen AI. MindForge provides a platform that pools data resources from the financial industry with Gen AI technologies to test use cases like managing compliance tasks, especially complex compliance tasks, against comprehensive risk frameworks. The iterative process will generate learnings to improve the industry's overall resilience and provide a controlled approach towards the safe adoption of Gen AI. And we hope to welcome on board more insurers on this platform. Second, MAS is supporting efforts to build an adequate base of tech and AI talent for the financial services sector, and including for insurance. We have launched several programs in this area. The Financial Sector Artificial Intelligence and Data Analytics Talent Development Program involves the industry working with training providers and institutes of higher learning in Singapore to curate programs that meet the needs of the financial sector and indeed the needs of the insurance sector. Many insurers have already tapped on MAS's grant support to develop use cases focused on improving customers' claim journey, detecting fraud in claim submissions, improving customer experience, all of which demonstrates the concrete value that AI can bring to the insurance value chain. So that's the second T on technology. But this brings me to the third T, which is talent. Because beyond the specific talent development program for AI, addressing Asia's growing insurance needs will require a strong base of Asia-savvy talent with the required linguistic skills, recognizing the diversity of Asia, the in-market experience, the networks, and the insurance aptitude. And talent remains a gap in the market. The industry needs to have a well-thought-out strategy and come together in a more systematic manner to attract, cultivate, and nurture such talent. A key to this will be efforts to attract younger people, including in Singapore from our polytechnics and universities, into the insurance sector. We all know there's stiff competition for talent everywhere, in all sectors of the economy and especially in finance. So the insurance industry will need to redouble efforts to attract its share of talent. Today, if you do a survey, just ask most young people thinking of career choices in finance, I think most of them will be thinking top of mind about jobs in a bank, in an asset management firm, or in a family office. Please don't misunderstand. This is not coming from me. Just ask them if you don't believe me. We want them to also think about the wide range of attractive and exciting career prospects and pathways in insurance, as all of you can attest to, having worked in the insurance for years and for some time. You know that it's an exciting sector too. And there have been promising results when the industry comes together to generate interest amongst young people. The Global Asia Insurance Partnership, for example, organizes an annual case study challenge, which has drawn more than 570 tertiary students across disciplines to develop innovative solutions to address real-world problems faced by the insurance industry. Students participating in this not only get the chance to apply their resourcefulness and pitch their solutions to industry veterans, they also stand a chance to secure internship opportunities from leading insurance firms. And this works. There needs to be more of such collaborative efforts between industry, students, universities to develop the future leaders of the insurance sector. Singapore is committed to supporting the talent needs of our insurance industry. We have developed a wide range of programs, including internships and apprenticeships with polytechnics and universities, work-study programs, leadership development programs, as well as postings to the region. We are prepared to do more and to work with all of you as partners to build up capabilities and talent for insurance. So I encourage all the key companies in our insurance industry to actively take up these programs, work closely with MAS in this area, and let's all come up with new ways to strengthen the talent pipeline for the insurance industry, not just in Singapore, but for the region and the world. Talent development and innovation will continue to be key drivers of value, and it is appropriate that the GIF is focusing on these areas through your Leaders of Tomorrow and your Innovation Awards. So I encourage you to advance this good work so that together we can nurture more talent for the insurance sector. I've spoken about 3 T's: transition, technology, and talent. But I should also end by the final T, and that is trust. And amongst our small group, we were talking about that just now. Because trust is what enables us to do many things. Without trust, everything is a challenge. But when there is trust, we can do many things together. For Singapore, trust is our most precious asset. Trust, we believe, is built by drops, but lost in buckets. So we take trust very seriously. We uphold trust within our country, working very closely with partners, with all of you, and also working with our external partners. And so together we hope that we can continue to develop Singapore as a reliable and trusted hub for finance and for insurance in the region and in the world. To conclude, the insurance industry's ability to manage large, complex, and evolving risk will enable the global economy to flourish despite the many new risks we face. I am confident that the insurance industry will further deepen its value to society in supporting the climate transition, in harnessing the use of technology, and developing the talent needed to make all these possible. So I wish all of you a very fruitful and productive forum and a good time here in Singapore. Thank you very much.